Hi guys, today I want us to talk about forex trading. I want to explain what forex is. I know that majority of you have no idea of what forex is. They only know that in forex we make money. That's it. So today we will cover only 4 topics. Our first topic is what is forex. Our second one is who trade forex. Then the third is what moves the forex market. I'm sure you're all wondering what is it that is moving the market, or who is in control of the market. So today I will share that information with you. The fourth one is the advantages and disadvantages of trading forex. So let's go to the first one, of which is what is forex. So basically forex is trading of one currency for another. Like you exchange currencies, you buy currencies, you sell currencies. That is forex. For an example, if you travel from South Africa to New York for a holiday, or you're visiting friends and family, you need to spend US dollars. So in order to get US dollars, you need to sell rands. This is one form of foreign exchange, of which is forex. Let's go to the second one, of which is who trade forex market. So forex is largely traded by central banks, and corporations, then retailers. Retail traders are people like me and you who speculate in the forex market to earn profit. Let's go to the third one, of which is what moves the forex market. So guys, forex is primarily driven by the force of supply and demand, and it is important to gain an understanding of the influencers that drive forex. So guys, in forex we have supply and demand. It is important to understand what supply and demand is, and you must know how supply and demand looks like. You must know how to identify supply and demand. And let's go straight to the point of what moves the market. The market is moved by central banks. Guys, excuse me. So supply and demand is controlled by banks, guys. When the market is moving, hence they move the market. On the way, they create supply and demand. Whether it is going up or down, they create supply or demand along the way. So eventually, when the market increase or decrease, supply and demand is always active. Since we are all curious of how banks move the market, let me explain something, or let me make an example. Let's say 100 people have millions. Okay, let me not say people, let me say banks. We have so many banks here. Let's say the banks are using millions to trade. Then we have retail traders, of which I explained before. We are retail traders. So banks bet with let's say they put millions, then we put thousands. If the banks decide to buy out of nowhere, they will control the market because they have more money compared to retail traders. If retail traders decide to buy, meanwhile the banks decided to sell. When banks sell, they use whether they sell or buy, they use a lot of money, like millions. So eventually, if banks bet with million, then retail traders uses let me say thousands. Eventually, banks are the only people who can move the market. Hence, they create supply and demand. Okay, let's go to the next topic, of which is going to be the advantages and disadvantages of trading forex. In forex, you can make money if you know how the market moves. you can make a lot of money. And the market works for only 5 days, of which is Monday, Tuesday, Wednesday, Thursday, Friday. On Friday around 12 o'clock the market closes, and it will open on Monday morning on 12 o'clock. On 12 o'clock. Forex, okay, what can I say? It has lower risk management. Actually, let me say better. Reason why I'm saying better, it is because it allows you to trade with small lot size, whereas other market allows you to trade with high lot size. And again, in Forex, the advantage is you can trade anywhere. In wherever you are, you can trade. That is the good advantage of trading Forex. It doesn't matter whether you need to stay at home and trade. Wherever you are, whether you're walking, in whatsoever that you are doing, you can trade anywhere. And again, it has low transaction cost. The lower transaction cost depends on the broker that you chose. For an example, if you are buying or selling using a small lot size like 0.01, they charge for the transaction, they charge 7 cents. It depends on the broker you chose. So those are the advantages of trading Forex. Let's go direct to the disadvantage of trading Forex. In Forex, you can lose money, a lot of money, if you don't know what you are doing in the market. So it is advisable for people to learn first, then they can start trading. So if you have no idea of what is happening in the Forex market, don't even think of trading. Stay away of trading. Fear, guys, fear. When you are scared of taking a trade, and it happens, believe me, once you see your setups, but the fact that you are scared of taking it, you end up making mistakes that you don't even know. Let's say you see that, okay, my setup is matured now, I can buy or sell. But the minute you have to click sell or buy, you become scared and end up doubting. You end up not taking the trade. The minute it starts moving, the price is moving away from the right place to buy or sell, you start jumping in. Eventually the price will reverse to retest. The minute it retests, we are out now. You lost your money. That's the bad disadvantage of trading Forex. If you trade Forex, you must. So guys, it is important to not trade with fear. Once you trade with fear in the market, you will keep on losing. You will keep on losing because of, number one, if you have fear, you'll doubt. Even the setup, you'll doubt everything. You'll end up doing mistakes, seeing things that are not real, buying where you're supposed to sell, selling where you're supposed to buy. That is why you keep on losing. If you have tried trading, but you kept on losing, you lost because of fear and doing something that you don't know, because of you are scared. You think what is wrong is right, what is right is wrong. That's the bad advantage of trading Forex.